The ProAct Know-How.
Welcome to this Wednesday webinar where we're looking at a summer of tax and the start of the tax season. Now, tax is an ongoing thing. If you have pay-as-you-earn tax, if you have bank interest deducted at source or pensions at source, then you're paying tax all the time. But when you go expat around the world, then because you cross border, you may be having to do self-assessment. Because you've got business interests, maybe you're doing self-assessment. Maybe you have got property rentals, in which case you have to account for that tax. Maybe in the country that the income is arising, maybe in the country in which your tax resident. The tax resident is everything. All expats need to be aware that this exchange of information goes on, and this has been going on under an OECD regulation since 2016. And what this effectively means is that a tax office, say in the UK, will collate the data from 2020 and then in the autumn of 2021 share that to the country where the beneficiary is a tax resident. So an expat living in Spain with UK property rental income, that will be reported into the UK, and then that information is shared to Spain a couple of years later. So in terms of worldwide tax assessment, we always declare the full income on each year's tax return. But if you've got through historic omissions or changes because you're going expat or you're relocating with your job or just retiring abroad or investing in a property overseas, then complications can set in. And unbeknown to yourself, you could end up with a tax liability in the coming years as a retrospective taxation. So these are the things to consider. So what we're specifically looking at today for our ProAct retained clients and for our guests today, what we're specifically looking at today is what taxes are due now in terms of an expat with a Cyprus and the UK connection. Cyprus has got a calendar year tax band, so effectively any other country with an annual tax return will have those issues connected to it. If there's an issue with countries like the UK or America can have slightly different tax dates based around the springtime, effectively the end of March period. The tax periods can start then, and that can affect when the tax returns become due. But actually, in practice, it doesn't affect when the tax actually gets paid. So let's start off with looking at tax for expats with UK interests. So anybody that's doing self-assessment tax in the UK because they've got business interests, property rental interests as an expat, the tax is payable at the end of July each year. That's the first instalment. So for the current UK tax year 21-22, the first instalment of tax is due in July, and that should already be estimated based upon your recent earnings. If the UK government think you should be paying more tax than you currently are because of change of circumstances, then you need to apply to have that amount requested and expected due. Otherwise, penalties will fall due and notices will be sent. By January next year, the second and balancing instalment will be due of any tax for this current tax year. With the UK, the tax return for the year to April 21 is due by that 31st of January deadline. So by the time you finally get that return submitted, if it's on the last day, the payment for that balancing tax is due on that date as well. And thereafter, penalties might apply. If you are a landlord, you might be paying tax at source through your tax agent. If you are, and you're an expat, contact us at proactpartnership.com because we can help you pay gross and settle your tax retrospectively in arrears, using your personal allowances to pay that tax in January next year. So if you're currently paying tax monthly through your agent deducting your property rental tax in the UK at source, contact us and we'll find a way to get that paid gross. So instead of paying tax month by month, you can pay it in January after the year ends. So you can get a 12-month delay on that payment. If you're selling property in the UK or other investments, capital gains is done with the annual tax return. So again, the payments could be due in July and January if they're regular or one-off payments. If you're an expat, then you don't have to necessarily pay capital gains tax on UK movable investments like Bitcoin, like shares or businesses. You need to be expat first. So expect guidance on that consultation before you relocate from the UK or consider selling a financial asset. Contact us at proactpartnership.com and we'll help you time that. So as an expat, you can do a tax return after the end of the year in April 21, for example, and any capital gains tax up to 20% is deferred for up to 5 years, and then it just falls away. So it effectively becomes capital gains tax free. Unfortunately, that doesn't apply to residential property. Whether you're expat or UK resident, you'll pay residential capital gains on any capital gains up to 28%. You need to pay that within a month. So if you're an expat and you need help submitting that return to pay that 28% tax, contact us at proactpartnership.com. Moving on to Cyprus, it's slightly more complicated, but it's essentially the same principle. In July, the first instalment of tax is due for the current year, and in December, the second instalment is due. The payment is online. If you don't pay it within the window, you can't pay it. So if you miss the deadline by a day, the online window shuts. With the UK, you can make a late payment. You'll still get the penalty, but you can still pay the tax, even if you're a day late. In Cyprus, that's not the case. So if you don't pay it on time, the opportunity to pay the tax slips away. All tax for the current tax year in Cyprus is self-assessment. So you assess in July what your full year earnings are and pay 50% of the tax now and the other half in December, without missing the deadline. So that's something to pay attention to now to get sorted and find your way to pay that tax. For help and guidance, contact us at proactpartnership.com. Now, if you're working, it's slightly more complicated. So an expat has an obligation to fill out a tax return or pay tax if they've got a liability. If they're self-employed, it's the same as an expat. So if you're operating a business, whether that's overseas or in Cyprus, you've got that obligation as a self-employed return. So that would follow the same timescales. You can fill out a full return, but in Cyprus, it's delayed because of technical problems. Again, it's an online return. So the 2020 return can't be submitted until end of September at the earliest. But it's only then that the balancing payment can be paid. You have a window of opportunity for 1 month to pay any balancing payment that's due without penalty. But if you miss that, then penalties will apply. Cyprus has got some flat rate taxes as well. So expat pensions are only taxed at 5%. Now, if it's a small amount of pension, it might be better to use your personal allowance to not pay any tax. If it's a higher amount, then pay the flat rate 5% tax, but it's got a very low personal allowance. So up to around 20,000 euros or 17,000 sterling, it's better to go on the normal rate tax for an expat. Below that, above that, it's better to pay or at least consider paying the special 5% tax rate for tax. Bearing in mind that all expats who are Cyprus tax resident also have a liability to health tax at 2.65% on their worldwide incomes, and that would be property rental, pension income, earned income, or it could be on any business income that you've got, and that would be worldwide. The only way to get exemption from that is to have a non-dom registration in Cyprus. Now, that's a formal tax registration. If you're an expat and you've been in Cyprus for less than 20 years, then you need to contact us at productpartnership.com and we'll get you